Hello, this is Stephen Lowe with ComStVex. Hopefully you're doing well today and you're getting some good trades. As we start the new week, we see a continuation of the risk-on sentiment in the marketplace. As the euro dollar drives higher, pound dollar pushes higher as well. Some traders are faced with what is driving this market higher and higher. It has to be, in my opinion, risk-on sentiment. Risk-on sentiment is when traders and institutions will go out into the marketplace, take their funds and move their funds into higher risk assets for a greater appreciation, a greater return on their money, a better bang for their buck. So there's two options that most institutions are looking at. One is where they put their money where it can be safe, like in fixed assets or U.S. bonds, U.S. treasuries, but that has a low interest-bearing return. Whereas if the market seems to be doing well, taking a look at the U.S. stock market, equities are making a strong move up. In that case, the macro funds and institutions will move their money into equities, into higher appreciating currency pairs that pay a higher appreciating interest rate. That's what's at play here to a large extent. Some folks are thinking, well, if the Dow's going up and the S&P's going up, shouldn't the dollar get stronger? That's not the case. When the U.S. interest rate is sitting at near 0.25%, but the Aussie dollar is paying 4.25%, and the euro and the pound are paying near 1%, it seems to be a better return to move funds in those higher risk currency pairs. And that encourages and fuels the move up in the euro. And the reason why I bring this up is as I trade in my active trade room, there's been times where I'm looking for a rollover in the marketplace. The market has reached a high point like it did here. It's starting to show some divergence. And price goes flat and even shows a sideways move here. Now 60% of the time in a sideways wedge, we look for the market to drop to the downside. Today, fueled by a little positive news out of Greece, we get a strong ramp up. And we got a short squeeze going on because the market still is fairly heavy net short the euro dollar. Interestingly, the pound dollar showed a very clear negative divergence scenario here. It still shows it at the time of this video, but it pushes up higher. And there's no new outlook from the Bank of England. Still kind of a negative overall concern on Great Britain. But again, we get this push to the upside. My suggestion is to watch the Aussie yen. The Aussie paying 4.25% and the yen just paying a 0.1%. This is our main carry trade. If not the Aussie yen, got to be looking at the Aussie dollar. But notice here on the Aussie yen that the market's struggling to go higher here. It's kind of bouncing around right about the 88 level. However, if you go out and take a look at the weekly chart, the big bird's eye view, you notice that about this time last year, the market got up to right around the 90 level and couldn't go any higher. After 10-11 weeks of a strong move up, seeing the Aussie yen, a lot of traders are thinking that we might get one last push up to 90 and then we'll start seeing a falter off of that. Just a technical move back, if nothing else. But be aware of the risk on sentiment. Now, what we'll be looking for as traders is, does the FOMC start changing their tune? See, they've been talking that we'll have these low interest rates for a long period of time, going into 2013, maybe even 2014. However, there's a survey done by CNBC that 67% of the economists think that the FOMC will be changing interest rates sooner than they've said they will be. When the U.S. interest rate starts getting higher and higher, when we start climbing out of this low base that we are at, as employment improves and the U.S. interest rates start to rise, you're going to start seeing a shift into more of a normal market basis. Right now, with the dollar being used as a carry trade along with the yen, expect to see movements like this that are out of nowhere. Because people today in my active trade room were thinking, well, Greece had a report that they expect to achieve a 75% economic output that they've lost over the last year or so. Well, I'm hard pressed by the end of the year they're going to come back up in their economic output by 75% when they have a 51.5% unemployment rate for those that are 25 years and younger. These are college graduates who can't find a job, 50% of them. I don't see how Greece is going to have a 75% economic output by the end of the year. So all we get is this positive news. It triggers the market, fuels a short squeeze of the marketplace, taking shorts out because that's the easy money, and then we drive higher. I'm hard-pressed, too, to think that the economic outlook on the euro dollar brought us all the way down to 130. In a matter of 3 days, we're back up here, 265 pips back up on Greece getting a bailout, and that Portugal may be the next Greece. So you got to be cautious of what's going on here in the marketplace. As the U.S. stocks and other equities in the world continue to increase, and it appears to be the place to put funds by large institutions for a greater appreciation, not until something happens in the marketplace that drives the institutions back to safe haven, back in the U.S. Treasuries or back into bonds, will we see this move off. My take on it is keep your eye on the Aussie yen hitting 90 mark. Once the Aussie yen gets up near that 90 mark, I think technically we're due for a bounce back. Well, folks, this is Dean Malone with Compass FX. Y'all be careful as the market continues to be a risk-on rally. And in a risk-on rally, oftentimes normal, traditional ways of trading are kind of thrown out the window, and you just got to run with the bulls. And so even though there are certain patterns like divergence patterns that set up that normally follow through, they may not as we stay in this risk-on sentiment in the market. With that, folks, y'all be careful in the marketplace, and we'll talk to you next time. Bye-bye.